Okay, so let's go ahead and show you a strategy that's kind of not really for the weak-hearted, because this particular strategy you need to have fairly high stop losses, because also on the same side of the or on the other side of the coin, the kind of pips that you can make from this are huge. Okay, now before we get into the strategy, I just want to sort of give you a couple of my thoughts before we move on. When you're trading, I mean, one of the main problems why people lose is being impatient, being greedy, and just being basically nervous. Try not to be nervous. Have this strategy that I'm showing you is purely mechanical, and what I mean by mechanical is that there is no emotional feelings behind entering the trade. When you go ahead and actually perform this strategy, you want to go and use them on the 4-hour and the daily time frame only. If you do it on the lower time frames, I can't actually say to you that you're going to do well, because there's too much noise going on, and sometimes the price projection targets will not get hit. Okay, so you're better off using this as a kind of like a set and forget kind of non-emotional / mechanical strategy. Alright, so it's one of these kind of things that you can turn on your trading station for 5 minutes and take a quick look, do your setup, and you can work out basically when your trend line gets broken to activate your buy stop or sell stop. Alright, so yeah, so try and be on an even keel emotionally, okay, and don't try to trade too many high lots. I mean, this particular strategy you could just work off at maybe say 0.1 lot or 0.5 lots or 1 lot or 2 lots or whatever, depending on your balance and the kind of money management that you would prefer to use and adopt. Okay, I would recommend using no more than say 1%, but if at the worst case scenario, use no more than 3% of your actual balance. Okay. Alright, so let's get on and show you basically what we're going to do here. First of all, we want to place the fractal indicators on there. It's on this indicators list on the left hand side. Just basically left click it, drag and drop, and the property box will come up. I've set mine to black. Alright, so hopefully those of us that are colorblind will be able to see that as well. I'm also going to just redo these lines here. I'm going to make them a little bit darker again, just so those of us who have poor eyesight will be able to see that line. Okay, so I'm going to remove that off. Okay, so the way this particular strategy works, let's go ahead and show you an example. Okay, this is a good one. Let's get a couple of points out of the way. First of all, we're looking for two reference points, reference A, and we're looking for reference B. And these are located by looking at the fractal highs, which are these, and the fractal lows, which are these ones down here. Now when we are looking for a buy trade opportunity, we're looking to only focus on the fractal highs. Okay. And then on for sell trade opportunities, we're looking for the fractal lows. Alright. Okay, and excuse me, and we join these two points of references up. Alright, so we will start from the left and work out to our right. Now let's just assume, okay, that all of this information right here on the right hand side had not been developed yet. Okay, and you're right at this particular point here, and you've just turned on your trading station. And you'll go, oh wow, here's a fractal high, here's a fractal high, and then what you do is you join these two highs together to create a trend line. Alright, now this trend line, look at the angle, how it comes down. It's around about 45 degrees. Alright, that's perfect. If you get one that comes down at around about that kind of angle, I would basically dismiss it. Even if it's in a straight line, I would not do it. I prefer to look for setups that are in that kind of angle. Anywhere between like 40 and 50% or something like that, will be completely fine. But you can, you can kind of estimate that that's kind of like a 45-degree angle. Alright, so let's go ahead and get our trend line tool out. I'm going to take it from that high, and I'm going to bring it down to that high of that particular fractal high. I'm just going to change the thickness of this one. Okay, now the next thing we need to do is to find a low. Alright, and the low that we're looking for is from there to there, so it'll be anywhere within that range. And we can see that there's a fractal low depicted by there's a low there depicted by that fractal low. So there's our low. So now we've found our low, we're going to get the horizontal line tool out, and we're going to place our line right on the low of that bar. The next thing we need to do is we need to bisect this particular line that's coming down, and we do that by getting the vertical line tool out. And this time we're going to go to that particular low that we just found. Okay, and now we can see that it's bisected this trend line. The next thing we need to do is grab the horizontal line tool out and bisect it once more. And then we can double click on that vertical line and press delete. Well, ladies and gentlemen, that is now our setup. Alright, pretty straightforward, yeah? You might need to watch the video a couple of times to get the real hang of it. And then get the crosshair tool out, left click from this top line, or the bottom line, doesn't really matter, as long as you bring it down or up to the next line, and try to get as close as you can as possible. And I'm basically left clicking and I'm holding the left mouse button, and we can see the middle number there is 1796. Now I'm using a 5-digit broker, so you will see these will be displayed in points. If you're using a 4-digit broker, then it will just be displayed in pips. So there are 10 points to a pip. So this one is actually saying to us there's 179 pips to be made from this particular trade setup. It's not guaranteed. I mean, it's quite stable. You will get some losses. Alright, you will get some losses. I'm not going to say it's 100% perfect, otherwise I'll be lying. Alright, but you will get some losses. But when you, as I say, when I was saying at the beginning of the video, when you got to like really work on your mindset, a lot of the reasons why I feel that people will lose is because they feel that they want to make money right now and then. I'm not really worried about the future, because a lot of people that get into the Forex or for the first time, and they're noticing that these other people are like making claims of doing well on their trades and what have you. So they go in with the wrong mindset, thinking that they can make so much money in one day or 1 week or 1 month, and then the next month they're scratching their head why they're not making the same kind of money. It's because all their mindset's wrong. Alright, you got to really look at this as an investment. Because a lot of people, when they come into the Forex market, they're in a position where they're almost in dire straits of trying to make some extra money on the side to pay their bills in the bad economy that we're in. Alright, and that mindset does hinder you in the long run. So I would recommend that if you're going to be doing trading, is to try not to be so hung up on getting a cash payout every week or every month. Let your account build up. Let your emotional control be very, very sturdy. And then as you go on over the months, you can turn $1,000 balance into $1,580. $158,500 over a period of 40 trading weeks. If you were to compound 5% of your balance on every 20 pips that you make consecutively for your TP targets on every trade. Alright, and that would work out, as I say, as $158,500. Even if you only made about, say, I don't know, 40% mistakes, you will still come out off around about 60 grand in profit off of a $1,000 balance over 40 trading weeks. Alright, so try and sort of keep yourself in the right mindset and try not to be too itchy to close the trade out. Let the trade continue to do what it needs to do. The only things I'm going to show you in a little while is a little bit like what we did before, which was the trail stepping in the first strategy video. Okay, so I'm going to show that in this one as well to show you basically what I would do in this particular situation. Alright, so now we've found our price projection. We're looking for a breakout of this particular line. Okay, and we can see that there's a breakout right here. Now sometimes you will see the breakout have a high right here, and then you'll see the low right here, and you'll see where it closed will be sometimes like below this line. Right, that's no good. That's not an official breakout. One of the things that people don't really understand is that you should really take notice of where a candle closes, not where it opens, but where it closes. It's extremely important. It's because this line here acts as a floating resistance line, and it's only respected. Sorry, it's not. How can I say this? Get my words mixed up. The only time that it's not respected is if the line breaks and closes above that projected line that we drew. If it closes below, you can see here, it closes below here, closes below there, closes below there, closes below there, and it respected that line until this stubborn one here says, no, I don't like you, I'm going to close above, and then eventually the market's changed and went in the other direction. Alright, so you got to really make sure that the close does close below, above the line for a particular buy trade. Alright, now if it was for a sell trade, then obviously you want it to be closed below the line, but the line won't be drawn in a downwards fashion, it'll be drawn in an upwards fashion, and if it came down and broke there, that will be your entry point to go short. But I'll show you some short trade examples in just a moment. Alright, so our entry point is going to be right here on that close and that open of that new bar. Alright, so now we've got our entry points in this. Now we need to look for a stop loss value. Now I tend to look for the previous low's candle or the one before that, i.e. this candle here or this candle here or this candle or this candle or this candle. But I need to say to myself, okay, how many pips does the British pound versus the USD move per day? Well, it moves around about 120 to around about 220 pips per day. So I want to try and stay within that comfy zone to allow the trade to move within that range. Alright, because if I set my stop loss halfway in between that range, and you're going to see that the market's going up and then it comes back down, goes up, and then it will come back down again and hit your stop loss, and that's going to really bugger you to no end. Alright, and you'll start questioning the strategy and start questioning your ability to trade. And Forex is a nasty game on the mind. You've got to really be strong, okay, with your mindset. And always compliment yourself. I know it sounds silly, but compliment yourself. Alright, build your inner esteem, so to speak, okay, in regards to trading the Forex, and you'll find that over the months and years to come, you will become a very, very, very confident trader. Alright, so again, make sure that the stop loss value is within the comfy range of the of its particular move for that pair. So I'm going to get my crosshair tool out, and this is our entry price right here. I'm just going to take a line down to there. That's 72 pips. Alright, so I'm not going to be comfortable with that, although it's a pretty good return reward to risk ratio. We're looking at what is that? I think we was talking about around about 176 pips or something, right? So there's 176 pips there. So if we had a stop loss value of 70 odd pips, we're looking at about 2.5 to 1. Alright, so from here, what I would do is I most likely would have my stop loss value probably down at this next one. Okay. Alright, and now I want to put in my price projection from that break right there, which was 176 pips, which is about there. So 163.78 free, 163.78 free, 163.78. Oh, right, double click on that. choose properties, parameters, 163, 63. Alright, so there's our TP value. Okay, so now I'm going to remove some of these out just for visual purposes. So there was an entry, was there, and we can take that one out of the way. So now that's our stop loss. Okay, so here is our TP value, here is our entry value, and here is our stop loss value. Alright, and then as the market starts to move up, you can see that it does indeed get hit, and this is on the 4-hour time frame. So 1, 2, 3, 4, 5, 6, 7, 8. 8 times 4 is that 8, 16, 32. 8, yeah, 32. Right. Okay, so that's 32 hours. All right, 32 hours to generate 176 pips, and if you did it at $10 per pip, it would work out as 1.76k. All right. Now, what I would tend to do from this particular point is that I'm going to reduce my risk as soon as the trade starts to get into profit, or maybe say like halfway. So when the trade gets to about here, I'm going to move my stop loss value, and I may even move it to break even, or I may even move it just halfway to reduce my risk. So I believe I was at around about, let's double check on what my stop loss value would have been, 134 pips risk for 176 pip gain. So when the trade comes in, when it gets into around about this level, I'm going to change that color to a dark blue. Alright, and when it gets to this particular level, what I'm going to do is I'm going to take my stop loss value and move it maybe about halfway. So now my risk has been reduced and my reward to risk ratio has been increased. Okay. Alternatively, depending on the kind of style that you'd like to trade, you can go ahead and place your stop loss value above your entry price. I would recommend about 5 pips, so at least you can book back the pip spread that your broker has taken away from you. Alright, so always try to at least cover back the pip spread. Okay, now some people might say, oh, that's just stupid, Loz. 5 pips is not going to make me rich. Well, on the contrary, if you did 5 pips per day, alright, at $10 per pip, you're looking at $50 per day, alright, $250 per week, $1,000 per month. That's 12 grand a year. That's a lot of jump change. Right, just doing these little 5 pip trades or whatever every single day. But anyway, it adds up. Alright, so think the long term. Alright, don't try and degrade, undermine the potential of the money that you can make. Alright, so now we've got our stop loss value. This is so we use this scenario. Okay, so there was our entry price, and then this blue line here is now our break, or is our stop loss value. Let's take that off. Stop loss. So we've now moved our stop loss from here all the way up to there. And by the time that's happened, the trade is sitting at around about here. And what we can now do, we could essentially take off a half a lot. So if we was trading one lot here, okay, we could go ahead and take off 0.5. Alright, so now we've got, for whatever distance that is to that distance, let's just say for hypothetical sake, so that was 45 pips, okay, then obviously that's going to be like $225 that you're going to be booking in, $225. So that's going to go into your bank. Alright, that's already closed profits, and you're going to have $250 as well as a floating profit. Okay. So now from this point on forwards, when the market starts to go up higher, okay, that you'll have 0.5 lots from here riding all the way up there. Okay, then once it starts climbing up a little bit higher, you want to take your stop loss value, which is right here, and you want to move it up. So this will be your new stop loss value. So now you've booked in 0.5 pips. 0.5 lots from this area to this area, So no matter what, if this starts to come back down, you will get the other $225 to be put into your account. Okay. Now when it starts to go up a little bit more, you're going to move your stop loss value up even higher, maybe halfway here, maybe book in another 25 pips. So now what we've done is we've booked in 25 plus 45 pips, alright, which is 70 pips now we've just booked in, times $5 per pip, which is the equation of this is equals $5. Alright, and that equals $10 per pip. So now we've got 70 pips there, so that's $350 we've now got secured. And as the trade keeps going up higher, now this is our TP1 level. Alright, now once it starts getting very close to my TP1 level, what I'll end up doing is double clicking on my trade and modifying it and adding another 176 pips to that particular level. And let's go up a little bit. So we go from here to 176, which is around about 165.53.2. 165.53.2. Oh bugger! I've got a memory span of a fish. Sorry guys. 165.49. 176, right? 555. Okay. So 555. 51. Did I put too many fives in there? Yep. There we go. Alright. It gets very close, look. I mean, it's almost hit our second TP value. So there's TP2. Here's TP1. And now we've, once it gets to this level, alright, what you want to do is, as I say, is book in those more pips again. So your stop loss value is now going to be here. Your entry value, where was it? Our entry value was here, so we've moved our stop loss up. We've booked in some pips when it got to this particular level, and then once it moves up a little bit higher, we're going to move our stop loss up to TP1, and then as it starts to climb up higher and higher, we're going to move our stop loss up even higher. Alright, so we're booking in more pips. This is called trail stepping. Alright, and that's the best way to actually go ahead and perform your trades. Now let's go ahead and remove these horizontal lines, and let's go ahead and find a sell trade opportunity. Alright, the sell trade opportunities, what we're looking for are two fractal lows. Okay, and this just assume that none of this information down here was actually created, and we come in and we logged into our PC on our trading station at that particular time. We can take this point A reference and we can take this as a point B reference. We won't take this one, and we won't join these up like that, and we won't join these like that because the line is too not steep enough. Alright, so this one here and this one here is fine because it's kind of like a 45-degree angle, and this one's also perfectly fine at another angle. Now you could actually adopt these two extra focus points to gauge really on how much you can potentially make. This setup here is a great setup, and this one here is also a nice setup, but there's not going to be much made from this one as compared to this one. Alright, so let's go ahead and show this example first of all. We're going to take it from our point A to point B reference, and notice that the line is pointing up this time and not pointing down. Okay, this is for sell trades. Now, can you remember the next step? Okay, let's just give you a quick heads up. From this area here, we now need to find the high. Now, last time we needed to find the low, remember? So the rules are basically being flipped. Okay, so now we found our high, which is depicted by that fractal high, which is another good reason why I like to put the fractal highs on there, because it gives you an extra insight on where to put your trend lines and stuff. Okay, so here's our high. So I'm going to go ahead and place our trend line in there like so. Can you remember what was next? There's a little hint. Vertical line tool just came out. Now we need to bisect this upwards trend line to complete our, or to try and complete our sell trade opportunity. Can you remember what's next? Now we're going to bisect that line, and then we're going to double click on that one right there and delete it. Okay, then we go ahead and get our crosshair tool out, take it from that line there all the way down to here, which is 94 pips. That sounds good. Alright, it's not too bad. Alright, so 94 pips. Now, can you remember the rule on the breakout of this particular trend line? Can you remember the rule in the buy trade example? If it basically, let's just assume that this is still a part of the candle formations. Let's just say assume that it came down like that and then it closed there. Would we actually go short when it sort of pokes its head there, or would we see like another candle being developed and then it closes below it? Which one do you think that we should be actually looking at? If you chose this one, then you'll be correct. Alright, so what we're going to do is that we're going to, I believe that was 98 pips, right? Or 94, let's just say 95 pips for argument's sake. So now we're going to take it from this point where the break comes in. Okay, we're going to go to that close, and we're going to come down and left click and drag to 95 pips. Oh, there we go. So that's 165.52.1. 165.52.1. 165. Did I say 52.1? I hope so. Yeah. Okay, let's just leave it there for argument's sake, because that's pretty close. Now look at this. I mean, look, boom, down that one. I mean, you get some really nice days like that, you know. So those are really like huge confidence boosters. So yeah, so now we're in. Okay, so our stop loss value. Where do we want to put our stop loss value? Well, what we're looking at now, if you're still a little bit unsure on where it is that you start looking for your stop loss values, what we're looking for is the actual break of the candle. Alright, so it's there we start to gauge on where we want to place our stop loss. Now again, we can take a look at this high here, or we can go ahead and take a look at this high here. It's up to you to make that executive decision on how narrow the risk that you want it to be, or how wide you want the risk to be. Alright, I mean, you can use other analysis, you know, with this particular strategy. Like with the way that my course has been laid out, you know, I know probably about 400 different types of strategies, and some people say, well, no, you don't need so many strategies, you only need 1 or 2 or 3 or something like that, and just stick with it. Hey, I completely agree with that, but there's also a downside to it. If you don't understand the full market sentiment of what's going on, or you know, looking at candlestick formations, looking at supply and demand areas, oh, the list just goes on and on and on, like Fibonacci retracements, arcs. Oh, you know, it's just overwhelming on the amount of stuff that you can use and comprise it all inside one strategy. Alright, so the way I lay my course out is that you need to watch each video in turn before you get to the next one, before it gets dripped out to you. Okay, because you can't advance into like video 150 if you're only on video 10, because I won't allow you to do that. Alright, because the reason why that is, I know some people like to have things all in one go and learn at their own accord and this, that and the other. That's completely fine. But I know from personal experience, from all of the people that I've taught, is that they get information overload. I would say about 60 to 75% of the people that I've actually taught and gave videos to them, like 50 videos all in one go, they were like, well, which strategy do I do first? Or, which ones should I use together? And they get really, really confused. Alright, and it's hindered their success, and they've just given up because they got frustrated. So I've set this course up in such a way where it's a progressive learning curve, and you use the previous strategies and keep them locked in your mind as you perform the next strategy approach in a different way. So you'll have these other strategies in your mind as well as the one that you're working on, so you can build a bigger picture for yourself. And by the time you get to the end of my course, you'll have so many like angles that you can come from and attack the Forex market. You will become an unstoppable force. I am totally serious. Alright, you will come off really, really well. And that's the reason why I've laid it out the way I've laid it out. So when you can go ahead and apply things like highs, and you can say to yourself, okay, if this is the particular high that's, this could be a supply area. Obviously, we need to zoom out a little bit to try and determine if this is a good supply area to work from. And if it is, you can actually use a lower stop loss value based on that analysis. If you don't do the extra analysis, I mean, even if you're a novice, I mean, you can still get away with this without doing the extra analysis. But if you are a novice, then I would recommend to go ahead and placing it maybe even above the high, or even above this high here. Now, alright, a lot of people get, well, it seems like a lot of people, at least I read on forums and stuff like that, they get so hung up on this reward to risk ratio and said, oh, you're crazy if you want to do like a 50 pip gain and you've got like a 200 pip stop loss. I can appreciate where they're coming from, but sometimes, it really depends on the person. I mean, at the end of the day, we're here to make money. We're not here to boast and say, oh, well, I made 1,000 pips this week. It's just ugly how people think, and it put people down based on what it is that they do. So, do things that you think is suitable for yourself. All right, don't care about what other people say. And even when you do mention things on the forum and stuff, I mean, when you're on my forum, I mean, there's going to be no slagging people off whatsoever. If I find that anyone's slagging people off, I'm removing them from the forum and from the program with no refund. Alright, because the community that I'm trying to build is a community that's going to be completely opposite to the Forex Factory forum, where everyone is swearing and effing and blinding at each other and insulting people and whatnot. There was a huge argument on the forum the other week, actually. It's actually quietened down a little bit, but there was, something had to really be done about it because it wasn't really being moderated, and there's a lot of people being upset and and whatnot. So I don't want to create that environment. Okay. So basically, the group that I'm trying to create for you guys is a group where you'll experience people's generosity, all right, their sincerity to help you do well. All right. If you make 5 pips or 10 pips in a trade, hey, congratulations. There's not many people that can do that. All right. All right. So use your stop loss values to wherever you think you deem would be necessary. But if it were me, and if I did this analysis assuming that this is a supply area, then I will go ahead and I'll put my stop loss value there. If it's something like where it's in between, like an Elliott wave analysis, and if it was like one of these trades here, then obviously I'm not going to go for a huge pip gain if like wave, if I know that I'm on wave 3 and heading towards wave 4, okay, and then I will get ready and be prepared to do a long trade opportunity via through this strategy, and then I can also work out whether these price projection strategy with Elliott wave analysis is on form into the price projection in regards to how many pips I can actually make. Alright, so this area here and this area here is 100%, so if that was like 200 pips, this area here to this area here will also be 200 pips. So when I go ahead and do my price projection for a buy trade, and if my price projection also equals 200 pips, then I know I'm pretty good to actually go and take that trade on. Alright, so that's what I mean. You can use other strategies to see if they can back up what one strategy is saying compared to another, and if you get conflicting results, then you leave it alone. You don't touch the trade and maybe go for a different approach. Alright, so this video has gone on for like 33 minutes almost, 34 minutes or so I do apologise for keeping this long and what have you, but I want to try and be as explanatory as possible. Alright, but anyway, you can see now that this trade does get hit, so we would actually get in here, alright, and our 80, 90 odd pips, 94 pips gets hit, and it gets hit in 12 hours, or less than 12 hours. At $10 per pip, that's $900 that you've just made in a half a day. Cracky, that's kind of lawyers' wages, right? So there's a sell trade opportunity there. All right, and I'm going to do one quick new one. All right, here we go. Here's another sell trade opportunity. So we're going to take it from point A to point B, and then I'm going to take my trend line to find the low, and then I'm going to get my horizontal line tool out and put it in there. See how quick I'm doing this, guys? And then I'm going to take it from this point to this point to find my projection. So it's 181 pips. So 181 pips on the upside. Here's 164.18. 164. 18 is my price projection from my TP value, and then right here is where we see our breakout, and then we go long right there, and then we target that TP right there. Alright, let's just show you show you another sell. That was actually going to show you a sell trade on that opportunity there. My bad. Let's see if we can show you another sell trade opportunity. Alright, let's try this one. Let's see how this one works. Let's see if I can find a loss. Alright, from point A to point B, we need to find the low. Alright, this one, when you get in situations like this, point A to point B, and you're trying to look for that low, well, what you would then do is actually use the low that actually comes off one of the point of the references, okay? And then you need to find the high. Sorry, my bad. I was thinking of the long trades. Got long trades on the brain because I'm thinking that the British pound versus USD is going to keep going up. My bad. Alright, so there we've just got our vertical line tool in there, and then we're going to do a price projection in there, and then we're going to work out how much this will come down. It's 122 pips. So then we're going to take a look at this entry point right here. We can see it comes down 83 pips or so. Now we can see that the market starts to go back up a little bit. Now where we're going to put our stop loss, we need to take a look at a previous high of the one that we actually created from. So here's the where's the breakout? So the breakout would be that candle there. So we're looking at the next previous high, and you can see that there's a high right there. You could actually go ahead and place it on that one, or sometimes you can actually go ahead and add what I refer to as a buffer, and sometimes you will see that you can see that it's one here, one here, and one here, and the prices are very, very close together. So what I might do is actually go ahead and put my stop loss maybe like 5 pips or 10 pips above the high of the qualifying bar for the breakout. So this one's going to be no good for me. That one is kind of suitable for me, and then I would go ahead and put a stop loss value maybe 5 or 10 pips above the high of that candle bar. Alright, and then what happens is that when we get broke, when we break out right there, we come down 87 pips. Now our price projection was for 122, I believe. Right, 122. So what do we do? You might turn around and say, if you're really catching on here, you go, well, Loz, look, boom, 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 and it's come back up, just lost all the profits. With that all being fair and well, yes, but however, when the price gets down to about halfway, what are we going to do, guys? We're going to take our stop loss value, all right, and we're going to move it to break even, okay, and then we'll let the trade ride out. If it comes back, now our stop loss is going to be up here. Now our stop loss value, as it comes down, it will get hit. So it'll be a no trade, could be like a waste of a day, so to speak, in regards not to making any money. But that's fine. That's just the way things, come off. Or the other alternative, again, as you can see this scenario, if we put our stop loss here, we can see that it didn't get hit, but it took a little bit longer for it to actually hit our TP target of 122 pips, which is from that open down here. We can see they come down 135, 136, 133 pips right there. So it does get hit. 122 is around about there. But unfortunately it came in at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So 24, so that's 80, that's 92 hours. Alright, so 92 hours, about 3 days, 3.5 days, or 4 days or so. Our TP target gets hit. For 122 pips, $10 per pip, that's $1,200 for about just over a half a week's of work. It's not bad going. Alright, really not bad going. And so there you go. That is the price projection strategy.